Evening, everyone. It's Monday night, the 10th of May, and this is your closing comment. It's video number 752. And while I'd like to be able to say that this market has gotten dragged down by the FANG stocks, the fact of the matter is it's been going on for a while. Yes, the FANG stocks have been a problem. But clearly they have not been the only problem. The NASDAQ is down 800 points in the last 7 days, and that included a fairly substantial, actually two fairly substantial up days during that time frame, while the Dow was moving approximately the same distance to the upside every one of those days. And the biggest thing that I wish to point out is the fact that I have used the same terminology probably 5 times in the last 10 days, and that is good news, bad action. We've had it every single day in the earnings numbers. We have had so many really strong reports. Some people will make all kinds of excuses. Oh, well, it was really better comps because of what was going on last year, or the reopening has pulled it forward. I don't care what the reason is and what the rationale is. The fact is, when there's good news and bad market action, it's a problem. So the chart on the screen tonight is one that I pointed out yesterday in last night's commentary about the relationship between the weekly S&P chart and its this blue line, which is the 20-week moving average. And it's been just, since it broke through it to the upside, it has just been religiously moving up, getting too far away, coming back down, touching it, moving up, coming back down, touching it, moving up, coming back down, touching it, moving up, new highs, coming back down, touching it. And the distance that I pointed out last night was the distance of this past week's close at 42.25 and the extreme distance that it has come for the first time in really the better part of almost a year, the biggest distance that it's come, and that it's due for a pullback. Now, today's action, I think, was horrendous. The Dow was up 300, finished down 35. The NASDAQ was down 350, closed pretty close to the low, down 2.5%. The S&P was up on the day first thing this morning. Last week's high was 42.32. Today's high, 42.38.25. Not a huge high, but a new high, closing down on the day, down 44, or a fairly decent move. My commentary is that we're going back to 4,000, and I stick by that. If we continue to see the kind of numbers that we saw today, as far as market internals, I'd be surprised if we stop much before these highs in this general area of 39.50. Today's numbers on the Dow closing down only $35, 0.1%, were 2-to-1 negative. Over on the NASDAQ, they were 3-to-1 negative. Volume was slightly higher. There was, again, decent news on a couple of stocks, and incredibly poor action. We started off the day with Asia being a little higher and the over the weekend news of the cyber attack on the Colonial Pipeline. And then we had a 661,000 Explorer SUV recall. And we had some good news and some bad news. But the first thing that we had was Citi downgrading Alphabet, parent company of Google, and Facebook. Facebook finished the day down over 4%, 305.97, down 13, and Google 2340 down 57, 2.4, 4.1 and 2.4%. Those are pretty big names, and there are a lot of people who say that Facebook is awfully cheap, and I get that. And I kind of agree with it. But here's some of the other stuff that we had today. And it was really quite a mixture. We had a miss at Marriott, a miss both top and bottom. This morning it was trading 144 down 479, 3.2%. It actually finished almost $4 lower than that, down 589, 480, 140.80, down 4%. We had a beat by TTD, which is Trade Desk. This is a company that in 2018 moved from 20 to 160. The following year, it almost doubled again, up to 290. Last year, in 2020, it rallied to a new all-time high of 972. So we had a 2-year move from 20 to 972. In February of this year, we had a high, slightly lower high, 921. And today they reported earnings. They beat top and bottom line. The stock, which had already fallen from 920 on February 21st of this year, closed Friday at 661. On those good earnings, on that beat top and bottom, the stock traded down to 480, 661 to 480. And it closed today 489.60, down 171.83, or 26%. You can't get much better news and worse action than that. We also had Rackspace this afternoon, which reported inline revenues and a beat on earnings. The stock had closed at 24.02, up 30 cents. And then the news came, again, a beat, and the stock immediately traded down $4 or $3.50, 20.52. Closed 20.79, down 293, 12.3%. Good news, bad action. It's really difficult to deal with or to ignore. Space, Virgin Galactic, a miss with inline earnings, a miss on revenues, inline earnings. Let's remember this one was a SPAC. So it came into the market at $10, and it was really the first big SPAC deal. Before the announcement, it traded down to $7.20. And then on February 4th of this year, it peaked at 62.80. It had already fallen to close Friday at 1961. And when the earnings hit today, the stock was $16, down 361, or another 18. This market is not giving up any sympathy to stocks that miss. Not with Marriott. The only one that had miss top and bottom was WYNN Resorts, WYNN Gambling. It had closed 125.73 and down 56 cents. And when the earnings came, it traded as low as 120, so down about $6 or just under 5%. Traded all the way up to 129.80 on some color on their online business, and closed the day 127, up 71 cents. So, we have had some small examples, but you can't compare a miss and a move of up 71 cents on a $127 stock to a beat top and bottom and a move of down 26% from 661 to 480 on good news. So this market is treacherous. I have been saying it for a couple of weeks. Extreme caution is necessary here. Interest rates are going up. I cannot stress that enough. The Fed never had control of the long end, only had control of the short end. And in fact, they've lost control of all of it. The worst performer, even worse than 3-to-1 down and down 350 on the NASDAQ, was the Russell 2000, down 58.53 or 2.6%. This is an index that really didn't rally with the rest of the market. So, one day we were up 26, but most of the days in the last 5 or 7 were to the downside. So this is a tough market. And again, caution is required. All right, everyone. Tomorrow we have the JOLTS number, the job openings. We'll see what that looks like in comparison. I'd like to blame this all on the miss of Friday's jobs number, but it started before that, and it's getting worse after. So it's hard to blame that too. All right, I'll be back first thing in the morning.